block space and fees. Block space, which is still scarce, and fees, which are now sky high. Bitcoin transactions are collected in a block, verified, and sent to miners for fees. The amount of transactions a block can contain is capped, and so as more people want to send Bitcoin transactions, fees go up. This has always been a main discussion point for Bitcoin lovers and Bitcoin haters. It's just now coming to the foreground since there has been a surge in demand attached to speculative token issuances on Bitcoin. People have taken sides, and who better to discuss implications than CoinDesk's Chief Insights columnist David Z. Morris, who is joining us here in our New York studio. Welcome, David.
Hi, George. Thanks for having me.
Good to have you. So I teed you up, but I want to get your clever description on what is going on. What's going on in Bitcoin's layer one, and is there just too much demand?
Well, I don't know how much of a review we need here, but for those who haven't seen what has happened basically since March, someone has discovered that as a result of the Taproot upgrade, there is now an ability to write a lot of new kinds of data to the Bitcoin blockchain, and that includes the ability to do inscriptions, which are sort of an NFT, and now these things that people are calling BRC20s, which are tokens that exist on Bitcoin, not exactly or even really very comparable to tokens on Ethereum, but people are minting them in huge volumes right now because there's a speculative bubble that's welling up, and that's creating a lot of new demand for block space as people are minting these things in huge batches, and fees are way up. Simple transactions on Bitcoin are running $20 right now, give or take, which is pretty nuts, and those fees have people upset. We can break down the different factions, but basically people seem to be, yes, there are too many people using Bitcoin right now, and for certain people that's a problem.
Yeah, and too many people using Bitcoin means that fees are too high, and it's becoming more expensive to use Bitcoin. So I'm going to make a fantastic leap in logic here. Is Bitcoin being attacked?
Okay, here we go. Yeah, I mean, this is the craziest line of argumentation or rhetoric that I see around this. To be clear, fees are going up because there is demand for block space. Bitcoin has a fee market. If you have a lot of people who want to get into this next block, they will bid against each other, and that is the fee that you wind up paying. And so you now have this huge surge of interest in doing new stuff on Bitcoin that's enabled by new technology. What it does not do, and that's bidding up the costs, what it does not do that I have seen in any way is any kind of threat to Bitcoin security. And that, I think, if you're going to claim something is an attack, you have to show that it's somehow undermining the system. And I've seen no evidence whatsoever that, aside from fees, which are transient, this is having an impact on Bitcoin's actual functionality. And unless there's some threat to security, I don't think there's any way to defend calling this an attack.
Right. It's a free open market, theoretically, and people are just bidding up the price of block space.
I mean, and also, just to be clear,
sure.
If this is an attack, it's an attack of people giving miners their money. So if you want to attack me by giving me your money, go nuts. That's an attack I can deal with.
Yeah, that sounds reasonable. I'm going to make another fantastic leap as we consider the factions that might be forming in this argument. Do we need bigger blocks? Is this a new block size war? Is that something that can alleviate the fee pressure, or is that something that's completely out of the question?
It's something that's completely out of the question.
Okay.
Next question.
Is that right?
No, okay, I'll expand a bit, because obviously not everybody has been here for all of the debates that have happened over the years. If you're arguing for bigger blocks, essentially the effect of bigger blocks is going to be progressive centralization of Bitcoin mining, because you have to have more hardware to store more data if you have bigger blocks. I mean, each of those 2 megabyte blocks that Bitcoin generates goes into every new node that you have to spin up, every full node. And so the reason that we don't want bigger blocks is that you then have bottlenecks for who can run a node. If you want Bitcoin to be entirely industrialized and run only on server farms, then sure, get bigger blocks. But that's not what most people signed up for.
Right. Okay, so maybe bigger blocks, probably not. And this isn't an attack, but is it a good use of block space? We just had a nice visual pop up where it showed a bunch of buses going, and that's everyone piling on the bus to go and get put on the blockchain. It's not an attack. Is it a good use of block space? Could you make an opinion here?
Well, see, that's the problem, is that is asking for an opinion.
Okay.
And what's a good use of block space is like a moral question. And moral questions are not resolved by the Bitcoin protocol. The protocol dictates that you can do something. The protocol has nothing to say about whether you should do something. I mean, there are plenty of examples of that, obviously. And so, sure, we can make a social argument that, and to be clear, to go even further, I don't think this is a good use of block space, right? Like, ordinal NFTs can have some entertainment value. BRC20s are definitely mostly going to wind up being used for scams for a lot of different reasons. But for a start, for people who might not be familiar with this, even though it's called BRC20, that's just kind of a made-up marketing term, and it actually doesn't have much to do with an Ethereum token, which can actually be useful on DeFi. Bitcoin, at least right now, does not have any native DeFi, and so people, even just to like trade these tokens right now, are doing all kinds of bridging and wrapping that's not secure. You're not staying on Bitcoin. The functionality is not there. So these tokens really don't have much utility native to them. There might be applications that are real that we figure out, and I think for that reason alone, we need to keep the option open. But certainly these huge blocks of, like, there's a Pepe on Bitcoin now that is just as pointless as the Pepe on Ethereum, let's be clear. Right. And so, I don't think it's a good use of block space, but it's not my place to determine that, and it's nobody else's place as an individual either. What you have to do is, maybe you want a protocol that actually keeps that activity from happening, but that's a different protocol. I mean, Taproot is implemented. It's there. Right. I mean, if you want to like roll that back and start a pre-2020 Bitcoin that doesn't have this functionality, you can do that. Yeah,
it sounds like playing the moral arbiter here for this specifically is kind of the same thing that everyone who doesn't like Bitcoin mining was saying about Bitcoin mining and energy.
It's actually exactly the same thing, yes. Right. It's like energy is infinitely fungible. Therefore, if you are going to say that it's to be used for one thing and not another, you're making a certain kind of value judgment that's not built into the system. Yeah. By the same token, block space is infinitely fungible, at least within the terms of the protocol, and so if somebody wants to use that block space and they have an application that they're willing to pay for it then they can use it, which, by the way, that's another point to make, right? These high fees are actually largely being paid by the people doing the activity that's driving the fees up. Yeah. So the people issuing all these tokens think that they're going to get economic value back from what are, I understand, some pretty huge expenditures on fees right now. And that's another solution to this, is that I think there's a chance if people don't speculate on these BRC20s, which they shouldn't be doing, then the people issuing all of them are not going to recoup their costs and they'll stop doing it. So that's the real solution here, is don't gamble on these tokens, which is, all this is gambling. If people aren't gambling on these tokens, then the problem goes away.
Right. I'm going to, very quickly, I want you to play more arbiter, though, even though we just talked about this. Does this mess with Bitcoin's goal as peer-to-peer decentralized money or as a store of value?
I mean, this is a real issue, right? I mean, I don't with any of this want to dismiss, I mean, especially we have some reporting this morning from CoinDesk about the impacts that it's having in developing economies, especially this particular article is focused on Africa, and the fees are going up, and that's having real impact on day-to-day users there, and that is an issue. However, we just had David here talking about Lightning, and you know what? We're pushing people onto Lightning, onto more efficient uses of block space for day-to-day transactions or for small holders. And also, let's make another thing clear. The demand that's happening right now because of BRC20s and Ordinals could happen 5 years from now if you have the actual mass adoption that certain people who are whining about BRC20s right now actually want. And so if you can't handle this spike in throughput from this weird speculative toy, then how do you actually expect to service the entire world? Well, consider this a stress test right now, right? You're seeing the pressures play out in economic terms. That's pushing people to find alternatives. We have an essay also from Nick Carter this morning that I think is amazing, and he made the great point. The solution to high prices is high prices. As those prices go up, it'll push people to other alternatives, and that will bring the prices back down. Yeah, and David, it seems like I got you sufficiently worked up, so look forward to your next piece. That was David Morris, CoinDesk Chief Insights columnist.